control. If the sky is pink and white, if the ground is black and yellow, it's the same way you showed me. Nod my head, don't close my eyes, halfway on a slow move. It's the same way you showed me. If you could fly, then you'd feel south. Up north's getting cold soon. The way it is, we're on land, so I'm someone to hold true. Keep you cool when it's still alive, won't let you down when it's all ruined. Just the same way you showed me, showed me. You showed me love, glory from above. It's all downhill from here. In the wake of a hurricane, dark skin of a summer shade, nosedive in the floodlines, tall tower, milk crate. It's the same way you showed me. Cannonball off the porch side, older kids trying off the roof. Just the same way you showed me. You showed. If you could die and come back to life, up for air from the swimming pool, you kneel down to the dry land, kiss the earth that birthed you, gave you tools just to stay alive and make it up when the sun is ruined. That's the same way you showed me, showed. You showed me love, glory from above. Regard, dear, it's all downhill from here. Real life, remember how it was. I'm cheap, Michael Jackson, all this shit. Say what up to Becky, the shoe. Say what up to Benny. Say what up to life and my time. So sweet, which I might like immortality. This is life, life, immortality. Time we've no control. If the sky is pink and white, if the ground is black and yellow, it's the same way you showed me. Nod my head, don't close my eyes, halfway on a slow move. It's the same way you showed me. If you could fly, then you'd feel south. Up north's getting cold soon. The way it is, we're on land, so I'm someone to hold true. Keep you cool when it's still alive, won't let you down when it's all ruined. Just the same way you showed me, showed me. You showed me love, glory from above. Regard, dear, it's all downhill from here. In the wake of a hurricane, dark skin of a summer shade, nosedive in the floodlines, tall tower, milk crate. It's the same way you showed me. Cannonball off the porch side, older kids trying off the roof. Just the same way you showed me. You showed. If you could die and come back to life, up for air from the swimming pool, you kneel down to the dry land, kiss the earth that birthed you, gave you tools just to stay alive and make it up when the sun is ruined. That's the same way you showed me, showed. You showed me love, glory from above. Regard, dear,
Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is February 2nd, 2023. And Bitcoin, we're talking about the DXY first, right? The US dollar is currently breaking a 248-day level of support. 248-day support level. And as a result, Bitcoin and the rest of the cryptocurrency markets are about to break massive resistance. That's how this works, okay? This is why we look at the DXY. I know there are some new subscribers. Welcome. Thank you for subscribing. Thank you for watching. Why do we look at the DXY? The DXY is the US dollar currency index. The US dollar currency index is what? It is a relative measure of strength of the US dollar. How do you measure strength of a currency? You measure it by comparing it to other currencies, right? So basically the DXY, or the US dollar currency index, is that you're taking the dollar and you're measuring it up against 7 other world reserve currencies, right? The Swedish kroner, the British pound, the Canadian dollar, the Japanese yen, the Swiss franc, so on and so forth. And based off of how well the US dollar is doing vis-a-vis these other currencies, the dollar is either strong or weak, okay? Let's get that much out of the way. Now, obviously, you're here because you're into crypto, and this is a crypto channel, so why are we looking at the US dollar? Glad you asked. It's for this very reason, okay? So, a few months ago, was it a few months ago? I don't know. It seems like years ago at this point. I thought about this. I asked and posed this question to myself, asking, like, is the DXY actually a thing, right? Because, there's so many quote-unquote experts, quote-unquote analysts that talk about God knows everything under the sun. This is important. The jobs report's important. That's important. That's important. How does that relate to the Bitcoin price? And how is that a good and reliable way to predict with a high degree of probability where Bitcoin is going to go, up or down, right? So I thought about this, and I'm like, okay, if this US dollar that people talk about, this DXY, if it's a reliable indicator of what Bitcoin and crypto is doing, I should be able to see it on a chart, because I'm a chartist. First and foremost, that's where I put a lot of energy, a lot of time, a lot of effort. I put a lot of practice into learning how to read charts, learning what, charts say. So I'm going to try and see this in the charts, and I did. So I took US dollar currency index, which you see below, and I took the price of Bitcoin. I put it on a monthly chart, meaning every single last bar or candlestick is a month's worth of price action. And what you can see here, I've showed this before on the channel, is an almost perfect inverse relationship, right? It's a perfect inverse relationship between Bitcoin, the price of Bitcoin, and the US dollar currency index. And this goes back as far as 2014. So almost 9 years. You can say more or less the life of Bitcoin being traded on an open market. Okay? And why? I know if we extrapolated this beyond or to before 2014, you would be able to see this, but the problem is we do not have reliable data on the DXY. There's something that we don't have charted, so I couldn't pull the chart back. In any case, this makes sense, right? So basically, the DXY goes up, Bitcoin goes down. DXY goes down, Bitcoin goes up. That is the general theme. That's the general relationship, okay? So I really want to emphasize this is hard data. It's not somebody said something and they have a lot of followers, or they're always on, YouTube, or, everybody asks them for an interview on TV and they said it, so it must be true. There's so many frauds. and I'm going to say frauds, people who, I mean, there's just a lot of bad analysis out there. So you want to be discerning. You want to do your own research. Okay? If you're going to make a mistake, make it a mistake that you make. Don't take somebody else's trash and make it your own. That's all I'll say about that. So back to the DXY. So now we have established the fact that the DXY is important. It's a reliable, that's the key word, reliable indicator for what Bitcoin is going to do. This is why this makes so much sense and why this is so important. It finally happened, okay? Obviously, the DXY has been breaking down. Since September of this year, it's been breaking down. Okay, you can see it here. Here, we can change the color. Let's make it red. Like a red alert. Okay? So, ever since September, as you can see right here, the DXY has been in a downtrend. Strong downtrend since September. Now, some people are saying, oh, that downtrend is finished. Lots of reasons why it's likely not finished. We're going to go into that in a second. But what's really important is that just basic support and resistance, and I always say, like, no matter what you think, you know, what you're doing, Gann analysis, Wyckoff, you know, Elliott wave, it doesn't matter. You should have a decent handle, a decent grasp of basic support and analysis. Support and resistance. Did I say support and analysis? Support and resistance, right? That's trading, charting, 101. Everything comes back to support and resistance. So if you look just in as, you know, basic support and resistance, you can see this level that's depicted by this red level was major support. Now, did we completely break it? No. You can wick below sometimes and regain the level. That's possible. But that's not what this looks like, okay? We're going to look at it on a smaller time frame. And we're going to see why it's unlikely that this is one of those, oh, I'm just losing the level to regain it, okay? And if that were the case, the action, the regaining or the reestablishment of the price above this level would have been much quicker. That's number one. But number two, you can see it on the small time frame why this is not at all positive for bullish momentum in this asset, in the DXY, okay? So since September, it's been going down, and as you can see, this level right here is a big support level, lasted about 248 days, okay? So 248 days, it's been above here, and finally it's back and breaking it. This is a big deal. And the target, if this is indeed a massive level for the DXY, we can, by pattern analysis, take the height of this pattern, let's say it was a pattern, some sort of head and shoulders pattern, right? And superimpose it from the side of breakout. I mean, that's a massive target. And that actually coincides or that it is confluent with our proposed target down here. Do you see that? So we have some targets down here. This is this blue box was in because technically speaking, if this is an initial break of structure and this is an extended or expanded fifth wave, typically the target of the initial break of structure for an expanded fifth wave in Elliott wave theory comes to wave 2 of the lesser degree. So that's a complicated way of saying that. I thought just based off of this count, this Elliott wave count, that the breakdown was likely to target this blue box, okay? But obviously my count may be off here, okay? That's possible. Or this may be this breakdown past this blue box may very well just be a wick down, and then we come back here and then the bulk of the consolidation happens here. So both things could be true, okay? But why do I have the target down here, like the actual target that I think is likely to happen? So if you zoom out of this chart, probably on the weekly, you can see really, really simply that this entire move that the DXY has been in since 2008, essentially, is a big channel to the upside. And we've been ping-ponging up and down of this channel. Every time we hit resistance, we come all the way back down to support, okay? Every time we hit resistance, come down to support. Resistance, support. Resistance, support, kind of. Well, we hit support in a 3-wave move. 1, 2, 3, yeah? Do you see that? Resistance, support. Okay? I don't know how long it will take necessarily, but I believe around this time we hit the support of this channel. And this is why I have the DXY falling, and this is also why a lot of people are going to see this. A lot of YouTube analysts, experts, quote unquote, are going to say the DXY is on support and we can expect a bounce. I mean, that is that is silly for many reasons, okay? And we're gonna see in a second why when you turn on your indicators to corroborate your reads, that's silly, okay? So let's go on a small time frame and see actually what this looks like, okay? What this loss of support that I'm saying is a loss of support, what it looks like. If there's anything bullish about it, or if it's likely to lose this level and actually head down to this region, okay? So for that, we have to go down. So let's go down on the daily. So if we come down on the daily, we can see, okay, we were in this channel for quite some time, right? We're in this channel for quite some time. We broke that channel, okay? That's what we see on the daily. Fine. Still doesn't tell us really the character of the move. We go on the 4-hourly time frame. What's it look like? So on the 4-hourly time frame, just in terms of price action, it looks bad in terms of a bounce. Why? Every time you break major resistance or major support, you break, retest, and then you continue, right? That's a principle. It's something that you can see throughout every market on all time frames. It's just, trading, charting 101. And I think a good grasp and understanding of those simple principles goes a long way. If you're really, you could be trading and charting for years, could have made millions of dollars or lost millions of dollars. This is something that is true on the day one, and it's true, late into your career after years and years and hours and hours and hours of doing it. And it's important, and people kind of forget about this. This doesn't change. It's true always. A major level of support, right? And I think it's really hard to argue that that's the case. Obviously, price is telling you that this is important because it danced on it for so long, right? This was like 2 weeks, but obviously we just showed you how if you go back 248 days, this was a level. This was important. So this was lost. What do? All of a sudden, you don't reclaim it, okay? Typically, when something's just wicking down below, in what people would call a bear trap or what you would call a spring in Wyckoff analysis. You see this sometimes. Price goes down, checks for liquidity, right? Liquidity basically like some dormant capital that it could use to go up. It does that. It checks below a range, right? So like you can be ranging, and then price is like, ooh, let me check if there's anything here before I go on up. And then it goes up. But in this case, instead of going up and down and creating a higher high here, what you're doing is you went down and you're like, okay, oh shit, I guess I'm done. Let's just check back to make sure that now this level of support now turns into resistance. You're flipping it. You're flipping support into resistance, right? That is exactly what happens when you lose an important level. And even more, I'll show you something. Even more damning is the fact that if you pull a Fibonacci retracement level from this move, what do you see? That you got stopped right at the 0618. Okay? You typically get that in the case of a trending move. So like, because we know wave 2 of wave 2 of an Elliott wave move, of an Elliott wave impulse, doesn't go past the 0.6185 ratio of the prevailing trend. Now, this may not be the trend. You could have a flat correction, go down, and then start your impulse. I'm not saying that this absolutely has to be the first impulse. But the fact that we can't even overtake the 0.618 also tells me on the smaller time frames, this is not good. This is not the kind of recovery you want to see if you're bullish on the US dollar. Okay? So, I know we had the FOMC meeting yesterday and the proclamation and all that stuff. A lot of people like to, talk about inverted yield curves and shit like that, but they can't even read a chart, and they're supposed to be chartists. The interesting thing is all of that stuff that people pretend to understand and gain, valuable trading information from is all in the charts, if you can only read the story. The story is saying, and I don't know what this means, that the dollar is headed down. Dollar's been going up since 2008, I think I saw on the chart, right? Is that what we saw when we went on the weekly? Let's go back on the weekly really quickly. This channel was... Sorry, what am I doing? Yeah, so 2008, yeah. So the dollar has been going up since 2008. And now, finally, we're headed back down. That's it. That's the story. What does that mean economically? Like, I'm not a macro or micro economist. I don't know. And I don't care. I'm a trader. I'm just looking to take advantage of the trends as they present themselves to position myself to make money on assets going up and down and taking advantage of major trends. So major trend is... After this since 2008, the dollar's been going up in a macro way. Since September of last year, 2022, the dollar seemed to break that trend. So you can expect risk on assets, stocks, cryptos, all that stuff that is inversely correlated with the dollar to go up as a result of the dollar going down in a macro way. That has nothing to do with... I watch C-SPAN for 5 hours and I'm LARPing as some, macro economist. No, you just look at the chart. The DXY, the US dollar currency index chart that we're looking at right now, tells all of the story. And if for real chartists, right? So many people pretend I just look at the charts. And then 2 seconds later, they're talking your ear off about how you have to look and see how Jerome Powell frowns or smiles or gives this statement. It's like either you're one or the other. And if you're not, just say so, okay? But if you have full confidence in your ability to chart, you should be able to just look at this in the chart. It's there, okay? So just in the smaller time frame, that's what we're concerned with right now. This is going down. And it's very likely, given this move, that this is not a reclaiming of this level, but it's a retest of this level as resistance for a move down, which would confirm the break of this 248-day range. Okay, so that's what I'm seeing. That's why I'm seeing it. Now, that's all price action. Price action is primary. Guys, if you're serious about doing charting and, using it to make money, don't short yourself. Don't sell yourself short. Learn how to do correct analysis using price action. Just being able to read and understand stories being told through these candles. So much can be told through the candles. And then use indicators, any what indicator you want, doesn't matter, but use indicators corroboratively, right? Don't make it that you're dependent. I know from experience, I'm speaking to you from experience. And I've said this before, I was at a point like earlier in my career where I couldn't really have a chart without all the indicators because I didn't trust my read on price action. Now I literally don't need the indicators, but I'm using them afterwards, and I'm like, oh yeah, that's what I saw too, okay? And you have to be careful. And why is it a good idea to do this? It's because sometimes these indicators don't take into account the context. They're not supposed to. They're just indicators, right? So it's just, and I think a lot of people who do technical analysis fall prey to this, where the indicator will be overbought or oversold or something like that, and they'll think that that applies to the general trend, when in actuality, if they zoomed out and used time frames, higher time frames, small time frames, looked at the price action, they'd be able to intuit and understand what's going on in the market. It's not that complicated. Okay, so we talked about how this was likely going to be new resistance. It was support, for 248 days, and specifically for the 12 days. Was it 12 days that it stayed in this range? Felt like forever. It was approximately 15 days, 16 days, something like that. Okay? But yeah, this is now becoming resistance. And this is exactly what you're seeing right here on the charts and with the indicator, momentum indicator. Okay? So this is the hourly time frame momentum indicator, the stochastic RSI. We got up to this level, and it is overbought, meaning it's looking to come down. Okay, again, that's just an approximate sort of read. The 4-hourly indicator is moving up. It's crossed bullish, but maybe the next 4-hourly candle, which should happen in about 1 hour, 2 hours. So is that 1 hour? Yeah, in about 50 minutes. In about 50 minutes, this should come up here. So also the 4-hourly indicator will be overbought, right? The hourly and the 4-hourly overbought. The 15-minute looks like it's coiling up, but the thing is, if it coils up and in a few candles comes up to here and we only move here, you understand that that is also overextended. It's basically overbought. You're basically seeing that a small move here leads to a larger move here. So if this pops up in the next 15-minute candle or next two 15-minute candles, that means that the trend that's being established is a downward trend. And so any momentum upwards is corrective, and that's going to be expressed in the momentum indicator. I know that's a little practice makes perfect. You keep reading these indicators and you'll get that. Maybe it's a little confusing, maybe it's a little arcane, but there's just little things that you notice the more you read these indicators. But definitely do not make the indicators your trading strategy if you're serious about learning, okay? If you're just like, you're not serious, or you just want to do a little bit, then, stick on the higher time frames, and, that's probably the best way to go about it. But if you're serious about reading the markets on high and low time frames, you definitely have to get comfortable just, reading naked charts and reading the story, the rich story that price action tells. So that is the dollar. The dollar is breaking down, okay? And the dollar's, basically the story is this. The dollar's been in a downtrend since September, as I said, since September of 2022. But the big pattern that it's breaking down from, okay, it broke down from this pattern, okay, we saw that. But now it's breaking down from another pattern. I don't know what that pattern would be, to be honest. It's breaking down from another pattern, okay? And essentially, it's going to keep doing that. And that is the definition of a trend. you break down from one pattern, and that breaks down from another pattern, and that breaks down from another pattern. And that's the definition of a trend. So this trend is likely to continue. That's what the charts are saying. So for anybody to look at this and say, this is support. Yes, it is support. But because it's support, I'm waiting for the dollar to go up and for Bitcoin risk on assets to go down. You don't know how to read charts. Because that's not that tricky, actually. It's not that tricky right there. Okay? There's nothing bullish about this. And lastly, go on a higher time frame, go on the daily time frame. Let's say you're really confused. Turn on your momentum indicator. What does the daily time frame show you? On the momentum indicator, stochastic RSI, nice momentum indicator, it basically says that the US dollar currency index, although it's been puking since September of 2022, the momentum indicator is all the way in overbought territory. Meaning the momentum indicator on the daily time frame wants to go down, even though it's been down since September of 2022, which is what, 3, 4, 5 months. 5 months down, yet and still your daily momentum indicator is all the way in overbought territory. If you want to explain that away, fine. But that means you're in a bearish trend, and that bearish trend is likely to continue. So many things are pointing to that, okay? So with that understanding and that knowledge, we can go on and look at our risk on assets of choice, which is obviously crypto. And we can see in cryptocurrency the trend being established. And okay, so we already established the relationship between the dollar and Bitcoin. Now understand that it's almost like it's flipped on its head, right? Because they're inversely related. So that means while the DXY is about to break down from a 248-day support, Bitcoin's about to break out of a similarly timed resistance. Makes sense, right? How long has this lasted? Let's see. About 230 days. So it's comparable, right? So we've been in this massive accumulation range for Bitcoin, right? And Peter Brandt, the famed investor analyst, calls this, I don't know what the hell he calls it. He calls it some random pattern I've never heard of. This is just an Adam and Eve. That's it. It's an Adam and Eve pattern. Or a W double bottom. Or it's a bullish pattern, right? It's a double bottom. And basically we're about to break out of that, and it lasted almost as long as the DXY has been above support. That shouldn't surprise you. They're inversely related. So if the DXY is about to dump, Bitcoin's about to pump, right? The only other thing I'll add is this. It's not a one-to-one. So although the DXY goes down a few points, a few percent, then Bitcoin and crypto goes up by a lot more because it's a lot more volatile. It's a lot more, a lot smaller of a market, obviously, than the US dollar. Okay, so understand that a small, tiny move in one direction in the DXY US dollar could mean a massive move in crypto. So even if you're looking at the DXY and thinking, well, Dean, that's not much of a drop. Let's say like the target was to be this blue box, or at most, a little below, you're like, that's not that much to go down. And you're saying that the targets are in the millions, right? Kathy Wood even saying that. Well, then you have to understand, and for that, don't take my word for it. Just backtest yourself. Go on the charts, look at the relationship between the US dollar and Bitcoin, and how when the US dollar moved one way, Bitcoin moved another, and look how much Bitcoin moved after a move in the US dollar. That tells you basically that a small move in the DXY can mean a massive move in Bitcoin and the crypto market. So that's essentially the crux of what I wanted to talk about today. Obviously, from here, we're going to look at Bitcoin, we're going to look at altcoins, we're going to look at the small time frames. Let me just see if there are any comments. Nice hash login says Clown World. Awesome. Whatever that means. Amazing videos of the world says, I think dollar is going to crash hard. Dollar is crashing towards downside, crashing in waves 3. Dollar will crash overnight. Dollar chart shows a ballel. I'm not sure what that last word means. A conscious says, hello, I'm late. What's up? No, you're not late. You're on time. It's YouTube. That's the best thing about it. I say I'm going to start at 1:30. I start at 1:45. Depends on how my morning went. So a conscious says, there's a YouTuber, Optical Art. He just uploaded a video saying in 60 days there would be a Black Swan event. Well, I've watched Optical Art. I feel like I've seen everybody. Like I was when I was learning, I was watching anything and everything I could get my hands on. In any case, the definition of a Black Swan event is that you don't know what's coming. So by definition, that doesn't make any sense. The amount of people who BTC to go down because they are underexposed is insane. Yeah, I know. There's a lot of people like that. And a lot of people are saying like 20. Well, let's go ahead and get into the smaller time frame analysis. Okay, so on the 4-hourly time frame, let's turn off the auto. Let's just have a quick look here. Okay, it looks green, but not super green. Okay, that's the first thing. Okay, okay. So just on the 4-hourly time frame, one thing I'm noticing is this. Whoops. So one thing I'm noticing is the first thing that jumps out at me is if we get above about 24,100 on this chart, then it's clear sailing. Okay, this is a resistance that we've been working on. Okay, and so I simply, just to get that, as always, you don't need your indicators. You just need to look at the price action, and the price action tells you the story. This is on the 4-hourly chart. For the past 12 days, this has been resistance. So it's important because it's 12 days worth of a trend, right? And I have multiple data points, okay? The second thing I see when I look at this chart is I'm not rejecting. I didn't come and reject, right? I'm talking about this. So this is, I found resistance rejected, okay, in a 3-wave move. That's a rejection. Came up in a 3-wave move. Came down in a 3-wave move. That's a rejection. Came up in a 3-wave move. Came down in a 3-wave move. That's rejection, okay? I did a consolidation reversal, which I believe to be a consolidation reversal, or what I believe to be a consolidation reversal, and I went up impulsively. And what's happening right now is that I'm not rejecting, but I'm consolidating at resistance, right? I always make this distinction between a rejection from resistance and a consolidation at resistance. The former is bearish. The latter is bullish. So here you can see, and you can see this a little more clearly on the smaller time frame. Let's go on the hourly. That you're putting in a move at resistance, okay? So maybe this is your 3-wave move, and this is your subsequent, I don't know, AB base, perhaps, but you're not losing this level entirely. You're basically working at resistance. So basically that tells me, if I'm just looking at this chart anew, I've never seen it before, that tells me it's very likely to get continuation from this level. Yeah? So continuation from this level, breaking this resistance that's been present for about 12 days, and actually this break of resistance let's go back on higher time frames, means a lot, because it means we get into this territory right here where there's very little resistance. Very little resistance. Very little resistance. I know a lot of people are talking about 25. It's not a level. That's not a level, okay? That's not a legitimate, like, big time resistance, yeah? The real level, the next significant resistance, just looking at the chart, is, if there is one, is around this blue box in the $30,000 area. Otherwise, there are no significant resistances that have multiple data points and have sort of proven over time to have a trend. Where do you see on this chart, right? People talk about this one point as if it's a trend. It's not a trend, because there's literally one point. Obviously, this is a weekly time frame, but there's one point at which you came up to this $25,000 level and rejected. But there's not like multiple points where you would be able to draw a trend and say, okay, that is a level. Do you understand? Difference. So, just because they see that was the high, it's significant. It's not, yes, it was the high of this area, but it's not technically significant as a level of resistance. I really want to make that clear, because that's what the chart says. And even here, there's no unanimous, probably maybe here you can draw a trend with multiple data points, but you see what I'm saying? You have to have enough data where you can draw a trend, and it has to be long-standing. So maybe if we get to this point, we start to slow up a little bit, but again, the larger trend is just up and unimpeded, unencumbered, unperturbed. If you really, really think about it and you look, yeah. So that is the small time frame analysis for Bitcoin. So I think right here, let's see. This is actually playing out. What's happening here? I want to say, let's see. Was this your first wave? Let's see. It's 5 hours. 15 hours. Not exactly sure. This doesn't look like your first wave, because this took 5 hours to form. This took way too long to form. So I highly doubt that that's wave 1, wave 2. Okay? Then this is likely also corrective, but it's a zigzag, meaning the direction that price wants to go is up, but this is still not pure impulsive price action. So if it's a zigzag, you're looking at a 3-wave rejection or a 3-wave correction from it that goes to a minimum of the 0.5 Fibonacci retracement level. That being said, I would not be surprised if Bitcoin tagged 23,500, this level, in some way, shape, or form before actually putting in a proper impulsive wave up. Okay, that's just what I'm seeing based off of the timing of this wave. Okay? And again, if you're over reliant on these momentum indicators, it's hard to tell the story, because right, it goes up and down and up and down and up and down, obviously on the smaller time frames. On the larger time frames, it can stay in the overbought position in a strong trend. So the fact that it's overbought or oversold doesn't tell you too much. For that to really make sense, even on the weekly time frame, you can see it's crossed bullish. It can stay crossed bullish and just do something like this. We've seen that before. And if you don't believe it, back test it. Look at previous bull markets. Look at the weekly stochastic RSI. I think if anything, the monthly time frame is more telling. That is oversold, and that is likely to come up. And when that gets into these areas, then yes, the trend is likely exhausted. So yeah, you have limitations with these stochastic RSIs, and actually, ironically enough, I think the smaller time frames tell you more or less what's happening, but it doesn't give you that much context. So you can see smaller moves, right? Generally speaking, in the next hour, do expect the price to come down and for this to reset. And then once this resets, do expect price to go up. But then you don't have any context. You see what I mean? So it's tricky. It's tricky. No substitute for analysis done with price action. Okay. Let's see. So that's Bitcoin. Let's stay on the hourly time frame. Okay. Oops. Cardano. Same thing. Okay, same read as Bitcoin. Let's actually do the 4-hourly time frame. And if you zoom out, you see that for some time, this level has presented as resistance. But what do you see right here? Do you see that? Guys, if you're bearish on this, you don't have a basic understanding of how charts work. You don't have basic support and resistance knowledge. What do you see here? This is Cardano. No indicators necessary. Look at what the charts are telling you. Basically, you've been going up and down and up and down and up and down in this region. Okay? And this trend line that I put has been clear resistance for about 18 to 20 days. Okay? 18 days, 19 days, whatever. But just recently, you broke it. And you retested it as support right here. Very clearly. You see that. You can see it on the hourly time frame if it doesn't make sense for you on the 4-hourly time frame. But you see that you broke a 20-day resistance. You retested it as support. You're retesting it as support as we speak. This is your big breakout. Okay, this is not just your big breakout from the 20-day resistance, but remember where you're at. If you forget, just zoom out. You're breaking a resistance that is, you broke resistance of this 500-day downtrend. You retested it as support. Now you break up from that in a rising wedge. And that rising wedge has just broken to the top. That's the story that the candles, that the price action is telling you. Some people are saying, don't get too excited with Cardano or, the crypto market in general. But charts like these are telling you otherwise if you know how to read them. Like, yes, it's going much higher than this because that's exactly what the price is telling you, right? You don't have to guess. That's what it's telling you. So that's Cardano. That's very exciting because that looks like it's going to happen any moment now. Okay? And if we do turn on our indicators, let's on the smaller time frames, you can see that you're pretty much on the really small time frames bottoming out. And whatever you do, maybe the next time you start moving up on the 15-minute time frame on the stochastic RSI momentum indicator, you do put in that large move. Okay? But this stochastic RSI momentum indicator is not going to tell you the magnitude of that next move up. Right? No context. It's just telling you that the price is going to go up. But what the analysis of the price action tells you is that it's likely to go up in a major way because you're breaking, 100-day, you broke 500-day resistance, tested as support. Then you broke 20-day resistance, retesting it as support. Okay, so that's really exciting. Let's go back to the 4-hourly time frame and let's move on. Algorand. Okay, similarly, you can see this is some sort of resistance that you've been in since the middle of January. So about 15 to 20 days. And you're just now butting your head up against it, okay, on this move. So what's likely is, if you're bullish, you're going to consolidate at resistance. You're going to put in a little bit of consolidation at this level, and ultimately break it, retest it, and go. Okay, so that's the story that we're looking for, just given the rest of the market and what the rest of the market is doing, right? There's no real reason to be bearish, right? We looked at the dollar, our main indicator. We looked at Bitcoin. If Bitcoin and the US dollar indicate bullishness in these risk-on assets, it's very likely that that's likely to happen in these assets like Algorand as well. Okay. Bonk. So this one is my favorite shitcoin. I always talk about it. On this, okay, this is a clear double bottom, right? Okay, or what we would call a pivot. Big A, big B. Actually, if this is big A, this is big B, this is small a, this is small b, your pivot's over here. Okay, so the pivot's over here. But yeah, you would call this a double bottom. So just zooming in to this region. This is clearly corrective just by our AP base count. Okay, and that actually corroborates what we saw in Bitcoin, right? Those 5 waves were not purely impulsive, they were corrective. So basically, we would call this wave A, we'd call this wave B, and then the subsequent move is the first impulsive wave, but this is a zigzag. Okay, that's what we saw in Bitcoin, remember? So here, I also would, and let's measure, let's say that this is the beginning of the wave. You want to see a move down to the 0.5, because a minimum retracement for B wave of a zigzag is the 0.5 Fibonacci retracement level. So just like Bitcoin, I expect at some point for this to tag the 0.5 before moving on up. Okay, I don't know how, but generally speaking, that's what I'm looking for. Okay, and the only reason this can be off is if I've miscalculated the length of my A wave, my 5-wave sequence, and that's possible, right? I just maybe not counting, and I didn't pull the origin point. But this is all generalized, right? Basically, I'm looking for a move like this, okay? But you're basically at resistance of this double bottom, right? You put in a double bottom, consolidating at resistance. You're expecting to move up and out from that region. Obviously, before you do that, you break, you retest, and you move. Because it's always important to break and retest important resistance and making it support. But you're essentially going to move, okay? Yeah, that's a bonk. Okay. Lots of people will get excited about this. More excited than I am now, even, as it starts going. Because this is going to go, 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 go. Why is that? So let me talk about that real quick. So this is a shitcoin. It's not a shitcoin in that it's bad. A shitcoin in that it's not trying to do too much. It's not trying to solve world hunger or anything like that. It's just a meme coin, and it's been constructed as such with that in mind for fun, right? And it does have some use, but the use cases are limited. It's on the Solana blockchain, and it just came out not long ago, last month, right? I think, yeah. And so, why do these new tokens move so much? Technically, it's because there's no resistance in their price. Because they just came out, there's no prior levels to break through as resistance. The only one you could say is probably here. So on this chart, there is one single resistance level, and that resistance level isn't like, hundreds of days old. This one, for instance, is just 5 days old. That's as long as you could, that's as much as you can say there's any resistance on this chart. And so that's why these new tokens generally run so easily. It's because there's no, technically speaking, right? There is no resistance, and so they quickly go into price discovery. So price discovery is when you're just looking for the fair value of the asset based off of who wants to buy and who wants to sell and at what levels. Do you understand? So this is quickly going to go into price discovery, and when it does, people get overly excited and they see it go up 500% in one day, and they're like, oh my god, I gotta get in. And then other people are saying, I gotta sell. It's gonna be volatile, really volatile. So if you're interested in something like this, these are the times to get in during these accumulation periods, right? And this is, if you pull up the Wyckoff accumulation worksheet or schematic, you will see something almost exactly to the T like this pattern. This is so beautiful in terms of the structure. That's why, as a technician, I look at cause and effect. I predict the effect based on the cause with a high degree of probability. I understand that there's a markup coming, right? And based off of how this accumulation is going, it's so, what's the word? It's so neat. It's so clean. I understand. I don't even have to look at the fundamentals. I did, right? Because I invested in this. But if I didn't, I would know already the liquidity, this is a buttoned up project. It may be a shitcoin, but it doesn't trade like one. It's very clean with clean levels, right? That's what it's telling me. The chart tells a really rich story if you know how to read it. Yeah, that's part of the reason why I love charting so much. All right, moving on. We have Dent. Again, you can see that you're at an important level of resistance. I would say it's about here-ish. About here. And so you're consolidating at resistance. That's the story here, okay? Also, obviously, you've broken resistance and retested it as support on these high time frame resistances. So you did here two birds in one stone, this bear market accumulation and this 400 plus day downtrend, both broken at this level. This was huge. This was the move. If you're like, should I be bullish on this? Once this happened and this happened, if you know how to read the chart, you see the story, that means we're going much higher. 400 plus days of bearishness accumulation are going to now translate into an uptrend, a markup from here on out. That's what this tells you, if you know how to read the chart, okay? And for people who, they don't watch my work regularly, just so you can understand what I mean by that line and that purple box is, yes, do you see this line is not just any line, it's a clean and clear downtrend, all right, lasting hundreds of days, broken to the upside, retested as support. So broken the resistance, retested it as support, and this bear market accumulation in this purple descending channel, same thing, broken as resistance, retested as support, right? It's not the same as what happened here, right? Here with this wick, because this wick, what did it not do? Although it broke the resistance, it never retested it as support, so it came right back down, okay? And that's why, nothing happened there. But here is completely different than this. All right, that's why the retests of the levels are so important. All right, moving on. Dodo. Same thing. These 20 plus day resistances are being broken. If you can't see it, they are being broken. Something like this. Yeah? I think this is broken, retesting as we speak. A breakout of this will probably yield the big move that you should see after this break and retest and after this break and retest. So that is exciting. Dogecoin. From here, I would say that is our main resistance. That has recently broken, right? Broke, came back down, broken again, retested. Okay, I think we're currently retesting it as support. It's important. So if this holds, then we get the fireworks. But essentially what I'm seeing throughout the market, just as a general trend, rising wedges that are breaking up. Right? If you zoom out, that's what you see. Rising wedges that are breaking up. Ethereum. I would say that my resistance for the past month, I think, is clearly this. Wait, let's see. Something like this, yeah? So you're currently in process of breaking and retesting that resistance. Okay, so same story. Litecoin. Do you see that? This has been in since January 13th. We just broke it yesterday. And now are retesting it. And so that next breakout should be big. Okay? RSR. You're consolidating at resistance. And that resistance is the midline of this bear market accumulation and that 400 plus day downtrend. You're consolidating at that resistance to break it, retest it, and then move on. Shiba Inu. Here is your resistance that you've been under for the past 20 plus days that you're retesting as support right now. Okay? All of these are really, really bullish. Really bullish. So many people are not going to get involved because they're in disbelief, right? If you look at the Wall Street cheat sheet of market trends, there is such thing called a disbelief. I heard somebody say this morning, I'm just going to say it, Garrett Soloway on BitBoy's channel said this morning, yeah, I'm a chartist and everything. Yeah, and this is what the charts say. It's actually bullish. But I don't think it's going to go past this level, and I think we're in for a big downtrend or rejection because it feels, the same people are telling you, don't be emotional, just look at the charts. He goes, it feels like too many people are bullish and retail is too bullish. And it feels like it did when we're at 69,000. So it's just unlikely that the market continue up from here because it just too many people are bullish and, whatever. So, and I think a lot of people are going to listen to that and a lot of people are not going to get involved. Do your own research. Here's my resistance in synthetics. Broken up, retesting, right? I expect it to continue. So it's the same story. It's the same story. About a 20 plus day resistance. Here, maybe it's right here. Something like this in Tron. Broken up for sure. I'm going to retest it as support. Yep. 1, 2, 3 wave move. Retesting this as support before you continue. Looks legit. Yeah, it looks legit. XRP. Where would you say? This is a little more messy. I don't know. Let's see. Okay. Okay, this is what I see here. Okay, I see, and I think I said this yesterday, this being a flat correction of sorts. And this right here may very well be your impulse just matriculating up. So I just see this as a proper impulse, right? Just in being, well, let's see about that. Does that make sense? I don't know about that. I don't know. This is tricky. I can see the general same trend. Okay, when in doubt, zoom out. And that's what I would do. Okay. So if I'm looking at this and I'm not exactly sure what's going on the smaller time frames, just going to zoom out and see that yes, indeed, this is a range that we've been in since May. Bottom of the range, middle of the range, top of the range. We've just broken the middle, retested it as support. We're going to the top. That's the analysis, right? If you can't do analysis on the smaller time frames because it's too confusing, just zoom out. And it's usually simpler. When in doubt, zoom out. That's what that means, at least to me. Zilliqa. I feel like this is your resistance that you're consolidating at, but that is not yet broken. Something like that. Okay. V-chain. This, something like this. You're consolidating at resistance. And then you're about to break it. But once you break it, obviously you have to retest it as support. Theta token, similar. Telcoin. This looks like a wave 1, wave 2 situation, and you're going for wave 3. Matic. Looks like you broke... Oh, did you break it? Let's see. Yeah. Looks like you broke it, and you're retesting it as support right there. So, looks good. And Matic also, on the higher time frame, this will quickly get into price discovery. Don't be surprised if Matic starts gaining and gaining and gaining and gaining, and people are like, oh, it's got to stop at some point, right? And it just keeps gaining. If you look, I know it seems like we haven't done much, right, in terms of movement to the upside, but if you look at your portfolio, if you've been involved in this move, you should see that every day you're making all-time highs in your portfolio. You should see that. Right? Even if you're still in the red, you should see that your portfolio's getting bigger and bigger and bigger, like with the underlying dollar amount or tether amount. You should see that, or Bitcoin amount, or whatever, you know? That is what happens in a trend. So yeah, we already said that. Matic, DYDX, this one's a strong one. Oh, I wanted to show you Matic has little resistance. Did I show you that? I don't think so. I said it, but I didn't show it. That's why I went on the weekly. It's quickly going to go into price discovery. And that's because there's little to no major resistances over here. Okay? Quickly going to go into price discovery. If you don't believe it, or you don't believe your eyes just looking at the chart, turn on some indicators. You can turn on your EMAs or your moving averages, and it should tell you the same thing. So on the weekly time frame, right? Not the 4 hourly, the hourly, or whatever. This is a weekly time frame. It's a pretty large time frame. You can see all your main exponential moving averages have been broken to the upside. You're already in technical price discovery. Does that make sense? You're already above the averages. Remember what the exponential moving averages or moving averages tell you? They basically tell you the average price that it should be for that period. So if it's a 21 exponential moving average, every 21 days it plots a point. And that point of data gives you the price for every 21 days based off of historical price action. So that's telling you that every 144 days, if you plotted a point of the price based off of historical data, you're above the 144 daily moving average. You're above the 21. You're above the 89. You're above the 55. This is a trend according to the story told by these indicators. And that's how a lot of indicator suites work. They use EMAs or moving averages, compile them, and then spit them out and tell you you're really bullish right now. Okay. And so, for instance, if you went and saw the technical indicators that come with TradingView, you see Matic is a strong buy on the daily. It's a strong buy on the weekly. It's probably a strong buy on the 4 hourly for moving averages. Why? Because you've broken those moving averages to the upside. So this is why it's so important to start with price action, get good at price action, and then you use your indicators, and they're not using you because you understand how they're coded, and how, even if you don't know how to code them, you understand what they mean. And so you can use them even more efficiently and effectively. And you don't need them when you can use the things that they're used from, right? They're just to make things quote unquote easy for people, but there's nothing quote unquote easy about trading. It can be simple, but it's not easy, and it requires some work. But I hope that makes sense. This is why if Matic starts going up 100, 200% in a day, and then the next day it does the same thing, and the next day it does the same thing, don't be surprised. It's in technical price discovery, okay? Even if it hasn't yet broken all-time high. It doesn't need to break all-time high to be in technical price discovery. From that vantage. All right, let's turn off the indicators and let's move on. DYDX. You can, if I left the indicators, you'd probably see the same thing for DYDX. It's moving a little faster, a little further than some other assets. But all the assets will get there. All the assets will get there. It's just, some altcoins are going to front run, which also reminds me, we're going to check in with Bitcoin dominance, because our thesis at the beginning of this bull run was that Bitcoin dominance would fall because in every legitimate bull run, Bitcoin dominance tanks because altcoins gain against Bitcoin's market cap. So here we go. Let's see. I'm seeing this as this is some sort of leading diagonal. 1, 2, 3, 4, 5, something like that. That's how I'm seeing it. It is. I wouldn't say this is a rejection off of resistance, but this is one contiguous move. That's why I'm saying that this is likely some sort of leading diagonal. After, so yeah, this is impulsive, but it's kind of a diagonal up and out. So that's my best read on DYDX. It can even, if it's not a leading diagonal, it can come down here and retest this. And then this could be one massive flat correction. That's also possible, okay? But yeah, it shouldn't matter when you're involved in these and they go up by as much as they gone up and they correct a bit, right? Because DYDX, if you've been involved, has just recently gone up 50%, right? In the past, couple weeks. So if it comes down just a few percentage points, it's neither here nor there, right? And you don't freak out because you understand the general trend is up and you're just hands off. Looks like Harmony is either broken or consolidating at resistance. Let's see. I don't know. Let's go back to the 4-hourly. Okay, this is... yes, this is that 45-degree uptrend that we were talking about yesterday. I would say this is it right here. I would use these 2 points. I would say it's consolidating at resistance. Yeah, I think this is the read. You're basically in this trend, and in order to break from this chop, you eventually have to break this channel. And so I think that's what you're getting now, a preparation to break this channel with this consolidation at resistance. You're going to break the channel, retest, and then go. So that's what I'm seeing with Harmony. Okay. This is simple. For Moon River, you're retesting the top of this resistance as support. This is going to be impulsive up, right? However it's going to play out, it's impulsive up. I'm not touching it, right? That's the read, and that's, I think, the 200 IQ big brain move. Safe key, it's still in this channel. It's still in that accumulation channel. So I'm basically going to wait for any clarity, wait until it gets to that top resistance, consolidates, breaks out, retests, and then goes. And that's it. That's it. Guys, that's the analysis on the small time frame for all the altcoins. If there are any other altcoins that you guys want me to look at, just let me know before we sign off. Concha says, Matic's high time frame price in the bull run, and you don't have any metaverse altcoins in your portfolio. I don't really do themes. I just go by based off. Okay, I'll tell you what I go off of in a second. First, let's look at Matic. I'm really satisfied with my portfolio, and I'll tell you why in a moment. So Matic on the high time frames. Let's look and see if we can't make a projection. Okay, so high time frame, if we zoom out, we do see what looks to be a 5-wave move. Or is it a 5-wave move? Okay, this to me looks like a wave 1, wave 2 situation. This looks like a wave 4 situation. So if this is wave 1, wave 2, this looks like wave 3, wave 4. I'm looking for wave 5. So when I do analysis, I like to at like quick, I don't like to second guess myself. Like all of my years of experience, and it's not just years, because it's how long you've been doing something. Like I've been playing guitar since I was 8, 9. But I'm not, Tim Henson, who started when he was 10, and he's probably 28, 29, but he's been playing seriously since, right? He's a professional guitarist. I'm not a professional guitarist because even though I've been doing it for a long time, I'm not as practiced. So a lot of people are doing analysis, or they've been doing analysis for a long time, or they've been trading for a long time. It doesn't mean they're as practiced. That's why I like to look at all the time I've spent practicing and in the markets and trading, all that stuff. That's more relevant to however many years. So for the tens of thousands of hours that I've been doing this, I've accumulated a lot of experience, a lot of instinct, and it's like I can look and process quickly. And the only thing that gets in the way of that is second and third guessing. So if I just let myself look at this chart, okay, the first thing that jumps out at me is that this is impulsive. Whatever it is, something's going on, it's an impulsive move. The next thing is I want to read the impulse, okay? And so my eye's drawn to this. And when I look at this, I'm thinking this is corrective, okay? And really quickly, I know it's corrective because this retracement seems like a lot longer than this move, even though this may be truncated and there may be more information my instincts telling me just everything about this is corrective. So I start counting from here, and I count this as 1, 2, and those of you who follow the channel will know wave 1 typically takes as long as wave 2 to print, and that to me looks like it's comparable, right? And then obviously wave 2 retraces to between the 382 and the 618 of wave 1, but wave 2 is typically a zigzag that goes between the 0.5 and the 618. All that information looks like a certain thing to me. So that looks like that, okay? So that to me is wave 1, wave 2. Wave 3 looks like this to me. And why am I not saying that this is wave 1, wave 2, wave 3? Because this does not seem comparable. There's no way, very little chance that your wave 2 is of this magnitude and wave 4 is a teeny tiny thing. So to me, whatever this is intra-wave correction of wave 3. Does that make sense? So to me, the first thing I want to say, when I look at this, within a split second, this is wave 1, wave 2, wave 3, wave 4. And so, on a high time frame, if I'm trading, Matic isn't going much further. I would be shocked. Two things. One, I would be shocked if Matic outperformed a lot of other assets. Because if you've been in the space, people with stories of, I bought Matic when it was under 2 cents and I made my wealth. The guy who did, I forget, Ian Bellina. That's how he made his wealth. Not all of it, but most of it. He went to India, he went to the ICO, he talked to the team, and he was an investor below 2 cents. And he rode this wave up, okay? And it just kept going and going and going and going. And so that is like his claim to fame. That is wave 3. And a few other assets put in a wave 3. So it's no wonder Matic is always so quick to get up and out of these bearish trends. It's because it's in pure impulse. Like, for instance, Litecoin wasn't in pure impulse for years. It's never been in pure impulse. So it's always been slow. Like the technicals explain why price moves the way it moves, and people have an idea. When they think of Litecoin, they think shitcoin. Not everybody, but a lot of people. And then when people think of Matic, they're like, oh yeah, good, fundamentally sound, and it's a good project, and it does well. It's because it's just a direct function of where it was in its technical progression. So I think you're not getting too much more out of Matic. You're going to get a wave 5, and that's all she wrote. And I'll tell you more. This wave 3 is extended. Okay, and you can measure it. I know from just looking at it, but let's prove it. Take your Fibonacci extension tool of this purported wave 1. This purported wave 1 is probably like this. Purported wave 2 is probably like there. Do you see? Your typical, run-of-the-mill wave 3 would have stopped here. Okay? Anything beyond this 2 Fibonacci extension is an extended wave 3. And you typically do get wave 3 extensions to the 3618, 4236. So this is a wave 3 extension. Matic just put in a wave 4. Okay? And actually, if we measure it from here, what do we see? It's exactly what we expect. So what do we know about wave 4? Wave 2 typically retraces between 382 and the 618 of wave 1. Wave 4 typically retraces between the 236 and the 382 of wave 3. What do you see right here? This retracement, I'll redraw that, is an ABC flat correction. It's a regular flat correction. There's nothing complex about it. And it hit between the 236 and the 382 of wave 3. Actually, we can, with all of this information, we can project with a high degree of probability wave 5. How do you do that? 2 ways to project wave 5. The first is you take the inverse 1618 of wave 4. The other way, and I think the more, especially when you have an extended or expanded wave 3, the more accurate method is to take wave 3 and target the phi ratio. Because if you get an extended wave 3, you're not getting an extended wave 5. It's very rare, exceedingly rare, almost, let's just say it doesn't happen, that you get 2 wave extensions. I've seen it once in hundreds of thousands of hours of trading and charting. I've seen it once. And I think I've seen it once, and I had to check and double check and triple check. I saw it once in Ethereum. And I even talked to another trader about this, Dan Dowd, another Elliottician. He's like, yeah, I've seen it before, and it was in Ethereum. But that's the only place I saw it. So I did get a bit of confirmation from somebody else independently that they've never seen it other than in Ethereum. But it doesn't happen typically. But it's not impossible. But it's exceedingly rare. So you take the length of this wave 3, retracement of wave 4, and project the 618. Okay? That is a run-of-the-mill projection. Again, any projection, time, word, price, is just a placeholder. It's just it's just, it's just something you use to get, basic bearings of a market. Obviously you go on a smaller time frame if you want to be more precise, and it doesn't mean it's exactly going to happen like that, but with the high degree of probability, that's very likely. So Matic, to me, is one of those that it's cool, and I'm invested in it, as you can see, but I'm not like Matic's going to change my life. This trade alone will make millions. Great. But it's not even close to going to be my best performer. And I can already know that because Matic already did its wave 3. It's done its damage in the past few years. If you look since 2020, this was where you made fortunes in Matic. You're not going to do bad from here. Not at all. But, you're talking about if, let's say we hit the 0618, and let's just put, the way I know me, I'm probably just going to do all this analysis and like erase it. But I like this. So what I'm going to do is I'm going to put this in properly. Because this is all work that we're going to do later on when things start moving and we get closer to thinking about taking profits. This is all the work you do. You're like, okay, where do I expect this to end? Do you understand? So, but since this is already done here, why not? So I'm going to do this. I'm going to put an alarm. Actually, I'm just going to leave that. And I'm going to add an alert there. Oh, that's bullshit. Whatever. Okay, I'm just going to watch this chart. Actually, you know what? I think I don't like that. I like to put a line and then make the line invisible so it doesn't get in the way. So here's how I do that. I go to the level. Actually, if I'm really smart, I put it right before it hits my target. And then I make the line invisible. Something like this. Okay. So I can see, and then all you do is you set an alarm at the line. And I'm gonna just put Sellmatic. But again, we'll talk about this later, but there's going to be ample time to sell positions at the top of a move. It's not like it hit it and then immediately it bounces off. Like, to sell it, bottoms and tops take longer than people give it credit for. If you study markets, you understand that, like, we had 230 days to buy the bottom, essentially, right, of the bear market accumulation. Similarly, in the same time frame, when you get to the top, you have a decent amount of time to sell the top. So don't think like, oh, there's no time. However, if this is correct, what's going to happen for Matic is you're going to come all the way back down to these regions. Because, right, if this is a wave 5, a regular wave 5, your initial break of structure is going to be a 3-wave move back down to between wave 3 and wave 4. So, okay, that's the high time frame analysis. And from here, yeah, it's a 6x. Yeah, it's not crazy. That being said, thank you for asking this question, Akanksha. Don't be surprised if Matic is one of the first to run and like do a 3, 4, 5, 6x. That's further confirmation. If that's true, everything else is kind of working its way up, starting to go, but Matic is just like, in a month, it's finished. Or even before the month is finished, Matic is put in a 5x. That is exhaustion. And we should be able, obviously, to read the trend, right? We should be able to read a 5-wave move on a daily time frame up here. That's also a confirmation. Another confirmation is once we turn on our indicators, and we have enough data on this chart, you will see this monthly, actually no, because we're going to see some bearish divergence here. So that is, we're going to go on the weekly. I don't know. I believe the monthly is going to shoot up. Quickly. That'll be another indication. Okay? But yeah, that's Matic. I don't expect that much from Matic. Maybe a 5, 6x. That's still a really good trade, personally. But yeah, it's not going to be like a life-changing trade for me. It's going to be great, but not life-changing. So yeah, I have it on, let's see. Yeah, 5x, let's see. That would be, let's see, $10. I'm just checking right quickly. Yeah, it's not bad. But it's not like amazing, right? In any case, yeah, that's Matic. I don't expect Matic to do too much. And that's a good point. Even though a lot of things are going to do a lot of... Oh, what is this? Okay, so the alerts are totally screwy. Do you see that? They were right. The alert... Or did it get moved? The alert's not even close to where I wanted it to be. Okay, let's just move it back. Okay. Something like that. Okay. So yeah, that's what I see with Matic. I don't expect too much from it. Because you're likely to get a regular wave 5, and if anything, because you got an extended wave 3, you can get even a truncated wave 5. But I would target that 0618. So around $9 to $10 for Matic. So Akansha asks about FTM. So I if you look throughout my portfolio personally, I have a lot, and this goes back to what I meant to express. I'm very excited about my portfolio. I do not have any metaverse tokens in my portfolio, but the way I invest is I don't look at different themes and try to get something from every theme, because I'm not in the camp that thinks, oh, this is like the theme, and that's the only thing that's going to be bullish. Like, it's going to be a DeFi summer, or it's going to be like a metaverse winter or something like that. Like, that's bullshit. Like, I could just look at the entire cryptocurrency market and look for trends. And if I notice a trend, like we're going into a bull market and everything's going to pump, it's just a question of when and then how much. So I don't really care if it's this or that. All I look for, my criteria personally, is if it's fundamentally sound, meaning, a decent team, it's a decent project, it's not a scam, and it has some longevity, good backing, good VC backing, all that stuff. And also, I look at the chart. And if I can read the chart, if the chart looks welcoming or whatever, then I invest. So, and then also, I remember just in my years of trading crypto, what I've always looked at and said, oh, that's pump. Of course that's pumping. That always pumps first. Because there's a lot of assets that I've looked at in the past that I felt FOMO at. I'm not invested in this, but it's every time I look at like a general watch list, this asset is pumping, and it pumps, typically faster and harder than a lot of others. So I remembered those, and I'm like, my ideal watch list is going to have some of those, and I'll tell you what those are. DYDX is one. Zilliqa is another one. Very volatile, but every single time I'm like, okay, is crypto pumping? I look, and that's one of them that's pumping. And so, yeah, there's a lot of different reasons why I have what I have. But yeah, that's one of the criteria. A lot of assets are going to go into Wave 3. We talked about Cardano. You can just go on the high time frame and look. Sometimes you don't have enough data, but sometimes you can expect them. You can expect like at least a Wave 1. So Algorand, Wave 1, most likely, because that's all corrective. Bonk is clearly just started, so it's probably going to print a Wave 1. Dent is probably going to print a Wave 3, right? You can just see it. Dodo's probably going to print a Wave 1, at the very least, right? Dogecoin. Dogecoin might be another one of those. It's a good question. I don't know. Dogecoin may just print a Wave 5. Okay? And that's another reason that I'm in a lot of stuff, because I'm not exactly sure. But it's possible that this is Wave 1, Wave 2, Wave 3, Wave 4, right? Kind of the same thing that you're seeing with Matic. and Dogecoin had its big, wave 3. But it's also possible that it's not, because you can see right here the 382. If you pull this purported wave 2, so end of wave 2, which would be the beginning of wave 3, to the top here, whoops, you can see we're already, let's see, yeah, you can see we already broke the 382. So it's also possible that Dogecoin already put in a full Elliott wave, which is 1, 2, 3, 4, 5 waves, and then 3 waves after. And that's plausible. Why? Because if you look at the time, it took about 427 days up and about 400 days down. So Dogecoin may have very well put in a first wave, a second wave, and it's going into a massive wave 3 on a what do you call that? On a cycle level, going into cycle wave 3, right? So, I mean, just go zoom out and just look for relationship in time and in price. Look for those common relationships with your Fibonacci retracement levels, and you should be able to tell what's likely going. But also, it's what you like. Litecoin, I've been saying for a long time, the whole of its existence, and this is not even a full chart of Litecoin, but if you look at a full chart of Litecoin, the whole of its existence has been one large leading diagonal, and you're about to hit wave 5 of an extended wave 5 of a leading diagonal. So it's going into cycle wave 5 as I read it, and that cycle wave 5 is going to be extended by definition. So it's going to have extended wave 1 or extended wave 3 or extended wave 5. So Litecoin, I said months prior, expect that to lead the bull market. And what has it done? It's led the bull market. It's been one of those coins that people are in disbelief of how it's continually rising against all odds when they believed it was a bad quality, low performing asset. So yeah, there's Litecoin's going to do really well, I believe. I believe Shiba Inu's going to do really well. Just judging by the charts, yeah. Look, it hasn't done anything. This is 2021. This is a corrective wave, right? If you were into SHIB, you went up 3 waves and you came down way past the 618. You hit the 786. This is corrective. You're eventually going to put in a proper impulsive move. So that already tells me on a high time frame, that's going to perform. It's likely to perform, right? It's all probabilistic. So yeah, just, pick what you like. Look at the chart. This is another one, Tron. Look at it. You have 600 days of consolidation. This is your cause. Your effect is going to be massive, right? This is the life cycle of the entire coin, right? So I have some of these, some of them that I'm very confident are going to do really well. XRP, Tron, Litecoin. Others, I don't know. But I got my hand in a little bit of everything. And that's strategic as well. Managing risk, not knowing when the next hack, where the next hack is going to, what the next hack is going to be, what it's going to affect. So that's why you diversify, because you control for risk. That's how you manage risk. That's another way to manage risk, rather. Okay, it was asked to look at FTM. So Phantom. And so we have some double-digit gainers already in Sushi. Oh, actually, I already have Phantom, so I don't have to do that. Phantom. So, I mean, look, this has been up. If people who are confused and thinking this is a bear market rally, I guess anything can be anything. If you don't know how to read, you don't know how to read, but this has been up quite literally 1, 2, 3, 4, 5 weeks in a row. And the most compelling part about this is that this is clearly a wave 1, wave 2 situation. This is clearly a wave 3. You're probably going to get a wave 4, maybe here, maybe at this resistance. Most likely going to be at this resistance. And then you're going to put in a wave 5, and then put in a larger degree wave 2 and then continue. High time frame analysis. I think I've already answered this question. Hard to tell with Phantom because this is a corrective move. This is a corrective move, right? You're coming up and you're coming all the way down. So I don't know what this is. I can't project anything from this. I need something, an A wave or a B wave, at least in a zigzag, to be able to project, or a proper clean impulse. So no projections can be made, at least from an Elliott wave vantage, for Phantom. So Akanshi says, so apart from VeChain, what projects are expected? Oh, I already read that. Can you look at Phantom 2 and has it done with Wave 3? All right, I entered that. So yeah, pretty much that's it. It's a combination, to summarize. What coins did I choose? It's a combination of coins that I like fundamentally, and that I looked at the chart, and the chart looks good. Doesn't look topped out. And also, you have a feeling, right? There's certain assets that have done really well historically, maybe since you've been in crypto, if you've been in for a couple years, and they've only performed. They haven't retraced much. Chances are they're not going to go up that much longer, right? Maybe that's not a good thing to say because people have a distorted perception of what's performed and what's not. I would just zoom out, go on the monthly or weekly time frame, and look and see if you can't spot Elliott wave impulses. That's the better answer. Okay? So, yeah, that's it. Guys, hope that was helpful. Hope that was useful. Like, share, and subscribe if you haven't. And I will see you tomorrow. Bye.